Hello, traders. It is 8:03 a.m. in Chicago on Tuesday, the 8th of January, 2019. As always, good morning, good afternoon, good evening, and thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on. We've got the indices just pushing highs. The leader again is crude oil, and gold is the laggard today. Crude oil is up a dollar, 2%, trading around 49.50. Crude's been on an upward trend now for a few days, followed by the Euro Stoxx 50 up 1.5%, DAX up 1.5%. Then we get the Dow up 257, NASDAQ up 65. The volatility index futures have dropped from 25 over the last 2-3 days to 20 as the market goes into rally mode. Gold is taking a hit, down $8.20 trading at 1,281. That's where we stand right now. Allocation is clearly to risk this morning, and we just keep pushing highs. The ES is hugging highs as I speak. So that's where we stand. In terms of what could be driving this, the answer is always who cares? Doesn't matter, but it is some of the indications are that the market's taking the initial round of discussions or negotiations between the U.S. and China very well. Hopes of a trade deal boosting risk appetite. Remember that there was talk from the current U.S. administration that something is probably going to be put together by sometime in the middle of January, and that's approaching. So it looks to me like the market is liking the fact that negotiations are ongoing. However, overnight, the German November industrial production shows another disappointing read in a string of disappointing European data. UK and EU officials out in force denying any extension to Article 50, to invoking Article 50. So the Brexit's looming on the horizon. As far as what we've got going forward for today, at 10 o'clock Eastern, we get the JOLTS, U.S. JOLTS job openings number for November, expecting 1.08. We do have consumer credit at 3 o'clock Eastern, and we get API crude oil API crude oil inventories at 4:30 Eastern. That's about 15 minutes after the pit closes in the U.S., expecting negative, or the previous is negative 4.5 million. That's what's on deck. Let's take a look at what we expected yesterday versus what we actually got. The primary expectation yesterday is for the market to pull back just a tad. Remember that we rallied on Friday, and then we held steady at the upper end of the range. We were basically forming a flag pattern. I covered this quite a bit yesterday, and the expectation is that we are likely to pull back just a bit. I'm expecting 25.23 to hold. I talked about this yesterday. 25.23, that stock zone, was also the overnight low. Expecting that to hold and expecting buyers to step in. I'm looking for an impulse higher and a push towards 25.60 or so. That's the primary scenario. The secondary scenario is we push up immediately towards the overnight high, unable to hold those prices, impulse down, and then start working ourselves back towards 2,500, 2,502. Here's what actually happened. Here's what the market delivered. There's the push down. 25.23 was the expectation. It got to 25 24.50 on the low. And then there's your impulse. This is what I attempt to draw with my lines. There's the impulse up, and we pushed to 67.50. We extended up. The target for me was 62.75, and the key extended target was 25.70, 25.69.50. This is the naked point of control, and it's an MC point of control from the middle of December. This is the area we're in had 3 days of balance before we fell off to the lows, and that would have been the extended target. The market pushed to about 2.5 points short of that before pulling back to the mid VWAP and holding steady into the close. So scenario one played out pretty well yesterday. The issue is that if you have to have a plan for trend day up. You have to have a way to get in with controlled risk without chasing and putting your stop way out of line. So that's where we stand. I've had some data issues this morning, so I'm doing a full download, and so it says importing data. The overnight session. Here's what we've got. Again, we have pretty decent volume overnight, 244,000. And then we held steady inside of the upper distribution of yesterday until the numbers in Europe. Then we popped up, pulled back. We held the mid, and then we clearly started to establish a trend up. And just now we're pushing the overnight highs. 25.76. Now 25.72.50, if I recall. 25.73.50 was the half back point, was the 50% fib on the RTH session only of the sell-off, of the last swing sell-off from the 3rd of October through the 24th of October. So that takes into account much of what we saw in December, much of what we saw in December, and we are breaching it right here. That level is around this area here, and we're pushing through that mid. I expect some chip chopping around in this area today. We rarely push into a 50% pullback and not take a breather. Just above is the FOMC scene of the crime location for December, the FOMC SOC right here at 25.77.75. Further, I expect an area of further resistance right in here coming into today. We're really pushing against what we've got in terms of resistance above. Big picture. So here's what we've done. We're approaching this really important 25.87. This is the bottom of this MC, this micro composite that's been around since the beginning of October. That's the bottom of it, 25.87. That's kind of the last frontier before we push into the MC. The next area up, man, I wish these importing data things could go away. The next number up is 26.07. 26.07 presents the big low that was put in October, and I expect that that's likely to present some form of resistance technically as well. Of course, if it's news driven, it's news driven. The market doesn't really care when it revalues news. It doesn't really care about technicals as much as we'd like to think, because a higher time frame steps in, and that time frame starts to place maneuver in the market, and it doesn't really pay attention to day type levels, which is what my technicals are mainly built on. So what do we have for today? These stock zones, by the way, those of you who get the stock zones at Convergent, these stock zones are not up to date. Like I said, I had some data issues, and so I need to adjust these for yesterday. These are actually yesterday's stock zones. We have quite a bit going on here coming into today that that has changed the way I was looking at things last night when I was looking at the markets. Last night I was looking at a strong potential for a push into 25.50, test that from below. There's quite a bit of liquidity there yesterday. And then test it from below and then push up and then start to make a move towards 25.75. And it's already done that, kind of taking away the primary scenario. We're opening in a gap. So the expectation, given where we are, remember there's a lot going on in this region right here. The expectation is for an open auction, wide swings. I'm looking for the market to pull back into this 25.67 area. And then I'm looking for it to bounce and consolidate. And there's a big factor here, and that is news. What does this administration tweet out? What does it say about what's going on with the negotiations with China? If negotiations break down, you guessed it, this thing could really push lower. It's almost like an economic release, but that is unscheduled at the moment. The way we're opening, I do expect us to dip down into yesterday's range. But there is the trend is your friend. The trend is quite bullish. We're one time framing up and we're shifting the point of control way higher. We're not just shifting it up and overlapping values. We're moving value way outside of the prior day's value area. This is a fairly strong participation on the buy side. So it's more likely that we are to drift up into this 2602 area, 2607 area, potentially even. That puts us inside of one day's range. So it's hard to say. Above us, 2587 is key. I'm expecting us to consolidate or see some resistance there, some rotation there. But overall, unless news comes out beating down this trade negotiation, I expect that we're likely to drift to this high volume node and the century figure above. Not seeing a reason that we would not do that. Secondary scenario, open up, push higher, impulse down, consolidate at the above, pull back up, unable to hold, push back into the range. If we push back into the range, looking for 25.57, and then what we do have quite a bit of volume all the way down into the overnight low of 25.50, looking for 25.50 bounce, and then start to move towards the next big area. Right down here, yesterday's open, 25.34 area. That would be scenario 2. Again, pay attention to the news. If you did not know, Convergent members get Trade the News included, the full service included with their subscription. So if you're at Convergent, make sure you turn that on. I know a lot of people are not logging into their news feed, which I cannot trade without. That's what I'm looking at. Unfortunately, my plans, what I saw coming into going into the late night last night, the big idea was for a push into 25.75 and potentially 77, and that trade's been taken away already with the overnight crowd, and that's where we're left. One last thing. Today, I'm appearing on Futures.io at 4:30 Eastern. The registration link is ft71.com/Jan 2019 FIO. This is case sensitive. You can also find it on my Twitter feed, twitter.com/FuturesTrader71. I'd love for you to register. Even if you cannot attend, make sure you register. You do not have to be an elite member to attend. This session is going to talk about basically some history, a little bit of the journey of where I came from, how I made the turn, and what has happened since. I've been doing this for almost 19 years as an electronic trader, We'll be talking about that a little bit. Again, ft71.com/Jan with a capital J 2019 and an FIO, capital F, capital I, capital O. I'll catch you there. Good luck today, and I'll talk to you soon. Take care.